When I came back to India in the late 80s, the Sensex was 800.
Yeah.
Today it's 80,000. So you had a 100x move just by holding on to stocks in India.
Yeah.
So India in many ways has been a very profitable area to practice value investing. Now people have tried all sorts of things in India. They've tried arbitrage, they've tried F&O, they've tried buying with insider information, trying with what management says, and then we tried value investors. And the ones still standing on the top after 30 years are the people who've been value investors in India. So it's, what you need to understand is that what Buffett allowed us to enter was there was a intellectual village called Graham Doddsville, who Buffett followed, and now I would call it Graham Doddsville, Buffett and Munger, which is an intellectual village for value investors. And Buffett not only was the mayor, we opened the doors and said anyone who wants to partake in it can do it. And thanks to his teachings, thanks to his lessons, thanks to his temperament, we all entered who wanted to enter. It was a free entry, there's no pass to it. And we bought stocks, and Indian market has been great for value investors. You've had so many great stocks like ITC, Reddy's, Cipla that have multiplied returns for investors over long periods of time. So I think we are very blessed that we could learn at the feet of the master almost.
Of course, you have a process that you follow that you've learned over the years, and you said that you've attended this beautiful village, this intellectual village. When you look at a company for the first time, what are the kind of filters that you apply? Not necessarily all of these fancy terminologies, but what are the simple questions that you ask? It's
in that case, I must admit that it's different from what Warren Buffett does. Warren is such a ferocious reader and such a ferocious acquirer of numbers that what he does is that he values a business and then checks the market cap to see if there's a difference between the valuation he thinks it should be and the value the market is ascribing to that. So by the time we wake up, he's probably studied 100 companies already. So he knows all the companies in the S&P 500. He knows companies in Korea. He knows companies in Japan, as he bought this Japanese trading company. So he keeps doing that. I have not, unfortunately, had the same prowess as him there. So I start from a different perspective. So I'm not exactly following Buffett. But if I like a business or I think bullish about the business, so for example, sometimes in the 2000s after the tech boom in India, I got bullish on the BPO business, or what is called now GCC, Global Capability Centers out there. I realized that we have a big business in India with telecom costs coming down, real estate costs being similar. So I went and did a deep dive on the entire the BPO business. It was a wave of a few thousand crores. I said it didn't make any sense to me. So we bought all the top 3 businesses that were doing BPO at that time. And that turned out to be a very profitable decision. So what I first do is I look at the market cap of a business and see what is the market ascribing value to it. So for example, to give you another more current example, the PSU defense shipping companies, if you looked at back 3-4 years, they were trailing at a fraction of the market cap they're trading now. It didn't seem likely because Mazagon Dock, which I'm not recommending, and I have a small position in it, but I'm not recommending this stock in any way. But to illustrate the point with you, it was available, it IPO'd at a market cap of 3,000 crores. And it had almost that much equivalent in cash in the balance sheet. And it had an order book visibility for the next 5 years. So it was just, deep value investing that we were practicing when we bought that. So I think there's a difference. I mean, you can't compare yourself to the sage, but the basic principles he taught are still valuable in India. Will they have a cash flow? Will they have, dividend yield? Will they have order growth? I think there are a lot of stocks and a lot of practitioners in India who skin the cat themselves. So as Warren has himself pointed out, it's not that you have to buy the same stocks. It's such a wide intellectual field. You have to buy things cheap, and you got to believe in the management, and you got to hold on till they came out. And I think that's the biggest lesson.